All right, good afternoon, traders. This is Christian from Market Trade Group, and this is your end of day market recap for Wednesday, April 12th. Well, another event out of the way, and not the best price action on the events. So, kind of interesting to start off the day, or to start off the end of day video. Well, first, let's go over the risk disclaimer. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. So I was going to say, it's funny that sometimes if you, coming into today, sorry, let me back up and say this clearly. Coming into today, we had a couple unknown events. The main thing was the CPI report, the new inflation gauge, new inflation measure for the month. And then, of course, we had Fed minutes too, but I really think the CPI was the main event for the day. But, sometimes we talk about this during earnings season as well. Sometimes even if you're given all the information ahead of time, you still may not get the price action right. And I think that's kind of symbolic on today. What seemed to be a fairly good inflation report, although some could argue with that depending on what measure that you look at. So CPI month over month, lighter than expected, 0.1 versus 0.2. Reminder, 0.4 was last month. But some looking at the ex-food and energy, which came in line with expectations, 0.4. I think other people looking at this core number, which came in, in line with expectations as well. The year-over-year number, I don't talk too much about the year-over-year number, although it is less than what it has been, is because I don't think people realize how that they devise the year-over-year number. I've gone over this a few times in past after the past CPI reports. I'll give you the brief explanation. The month over, it's basically the year-over-year is just a compilation of the month reports. So what this means is if you look at this report, let's see if I can just bring this up for you really, because there's some confusion about this. So first of all, here's what this report looks like month over month, right? It is decreasing, but it's taking a while to decrease, right? And if you look at these reports month over month, right, and basically, the net change, right? It is a rolling, it does look back 12 months. So if you add up all these previous months, you're going to get very close to what that year over year number is. What that means is, right now we're on March, right? And if you go back a year, right, you still have these high numbers, right, that came over month. You've got a 0.6 and you've got a sorry, right, this number you should be looking at. I'm sorry about that. So the last price, right? So if you look at the percentage change, because this was 0.1, the previous month was 0.4, the previous month before that was 0.5. Look back at all these numbers back here, right? So again, rolling 12 months. So as we begin to kind of move further out of May, last April, last May and June, you're going to see that these numbers are going to get much smaller, right? So again, so why do I bring this up? Because it gets confused a lot. The Fed's inflation goal is 2%, right? So that's not going to get close to coming to 2% until we get past June, because again, it's a rolling 12 months and it's the change, right? The inflation rate is the change. So if you get past June, we would be looking at right now, if I just do the math really quickly, right? You've got 0.2, whoops, you've got 0.2, you've got 0.4 in there, you've got a 0.5, you've got a 0.2, you got a 0.1. You got a 0.5, which was a high reading back in January, 0.4 and a 0.1, right? So once we get, like, if the numbers continue to kind of come out like they're rolling out now, 0.1, 0.2, right? And this 1.2 goes away, which it will in a couple months because it's a rolling percentage. You'll get to around like 2.4, 2.5%. All right. I know that some people don't like that because they think, well, that's not right, but that's just how it's calculated. And if you go onto the CPI, website, right? The Bureau of Labor Statistics, that is in fact how they calculate it. So this 1.2 has to come out of the picture, right? And then you will see this rate get more normalized. Again, it probably won't get down to 2%, but it's going to get a lot closer to 2%, provided that we don't see like another jump. Like if we see another 0.5 or 0.4 in there, then that argument is over, right? I've gone over this with people. People get very mad at me when I mention this, but that is just how the inflation rate is calculated. Again, you could also take the level from where it was a year ago and basically do the same thing too. But these months have to roll off for us to get closer to that. All right, so that's a little bit about that. What I was watching too was what the interest rate expectations, they were changing a little bit, but it looks like for now the Fed is still looking at raising interest rates 25 basis points for the next meeting on May 3rd. Now, that's a few weeks away, and there's a lot that could change that. But for now, it looks like 25 basis points is in the cards, right? At least that's what Fed fund futures are telling us, right? The Fed looks at this and they know that. And if they want to adjust this, downward, or, again, the Fed doesn't like to shock the market. So we'll see if something new comes out. Reminder that we get PPI out tomorrow as well, which is another gauge of inflation, and you're going to get one more PCE deflator. That's at the end of the month. So could this change? Of course it could change. And again, this is just giving you a snapshot of right now. It's not predictive. It changes with the market, but right now there's a 74% chance that they're going to raise interest rates by 25 basis points. And again, that could also kind of lead to what we experienced today in the market. So going back to what going back to the, getting to the price action, which will tell you enough. We gapped up, right? This was the problem with this version point of control that was lingering here. This is S&P futures, right? And we've been talking about this for a while, that this was something that would be interesting once we encountered it. So we came up to this version point of control and we knocked it out. But a lot of times what will happen with these version point of controls, again, the market webs, which is the indicator that I uses volume at price. And often once this gets taken out, you may see a rejection. So note that there's one here on the 1 hour, right, which lined up perfectly. So again, notice how close we got last week to taking this out, right? We left it behind for today to get taken out. But, overhead supply is very tough in this market. It's tough when the Fed may not be done raising interest rates. So it's not a situation where we could just blow past this overhead resistance. So again, to me, this is the best gauge of volume at price, right? I know that some people use like anchor VWAPs and those types of things, but this is as good as it gets. You don't have to do the issue with the anchor VWAPs is it's subjective, right? You have to do the anchoring at the lows and so forth, right? This is all automatic, right? There's no adjusting of anything, right? We get one of these version point of controls on the daily chart per month if we don't pass through a value area. So that's a big thing. All right. And so so what happens next, right? Well, ultimately, if you're bullish, right, or if you're a market bull, you want to see a move back above this 4160 level, right? That's all there is to it. If we do something like we did last time, which this was the high of the year on February 1st, same thing. We took this out. Notice that we kind of hung around here for about a few weeks, right? And then we took that leg lower, right? So right now, as of now, this is a lower high. So this is not a great picture. But we're just kind of hanging around here, and we may have more chop, right, in front of us. Now, I would say the one thing that's positive is we haven't really lost too much. We haven't lost the 20-day moving average. We haven't lost the 50-day moving average. We're still above the 200-day moving average, and support may need to get tested, and that's down at 40.43. Let me go back to the 1 hour chart, but before even that 40.43, which is way down here, right, which is also where this VPOC is, I would watch this 41.06. Now, how would I play this? right? Well, if we break this 4106, which was the low from earlier this week, you could look at a short basically down into this 36 level. But keep in mind, we may not go down there in a straight line. We certainly haven't been doing that. In fact, if you look at where we are now for the month, right, the S&P is just for the month to date is down slightly for the month, right? So not that big of a deal. Of course, the Qs are down a little bit more. Those really have been an outperformer year to date. Right, so let's go over to the Qs. So that's a level to watch, and that's what we could be looking at. Notice there's a virgin point of control down there. Just sticking with the 1 hour chart, right? But we have now broken just barely, but we have broken the lows from last week and the lows from this week. So this does for now look a little bit weaker. But we do have this support on the daily chart of 312.60. So that's what I would really watch before I would do any particular shorting. I would see if that gets broken, which lines up with the 20-day moving average. If that does, then maybe you could see a move back into the 50-day moving average. All right, but that's what we're looking at right now. It's been a lot of chop this month, right? We know that, again, from what I felt like, at the end of the month, that things got a bit ahead of themselves, that quarter end rebalancing. What is normal is consolidation or digestion, but I mean, it doesn't mean that the markets are going to kind of follow that, being normal. I mean, we could come back and retrace some of the further those levels. So that's something to keep an eye on, right? And of course, in terms of like trading and so forth and keeping positions on, this is a game of patience. If we can kind of get through this period, right, then I do think inflation is moving in the right direction. I think it's a positive. Whether or not the Fed increases interest rates by 25 basis points isn't that big of a situation at this point. What's the overall interest rate right now? If you go back to this, we're at 4.8%. So another 25 basis points down or up, I don't think makes that, is that significant. So I think that this is a waiting game. And you have to be patient and, not get caught up too much in the chop. And it stinks. I had a down day today. I added to, I try to sell some things on the open, but I guess I got a little bit greedy, looking for some bigger targets and some things. Like I have Starbucks on, I had a Perry play on as well, again, looking for bigger targets. And I did get stopped out in a couple trades that I had on as well. Like Alibaba, I had hit 2 targets in a swing trade in that one. I took that name off today. It was just too weak, and I'm back out of my NVIDIA trade as well. This name looks a little bit weak, right? I know so many people are looking to short this thing. I would watch for a break. If you're really looking for a short, I would watch 262. For now, it's just, and this is a lower high, which is not good, but it can hold support. But if it breaks 262, right, that is kind of a line in the sand. There may be, you might have an opportunity to kind of make some money, because if that breaks 262, maybe we're headed back down to 239, right? Some of the is really coming out of these artificial intelligence names. I think there was one name that was up, but for the most part, these things are starting to come undone. Big momentum plays. And I kind of think that they should, right? Look at the move back in this AI, after it took out that last VPOC. 2094 would be the level to watch there. That could also be a short further down to the 200-day moving average. All right, a few other things. So IWM. So again, mainly on a day like this, kind of go over the average, the indices, right? But IWM also, we got back to where we were in the beginning of the month, right? IWM had some strength the last couple of days. Today, again, ugly looking candle, a lot of bearish engulfing candles for the day, and that level 178.86 top of value for the month rejected perfectly again, just like it did last time. All right, so that is what we're dealing with. I would say one small positive for the day is that the dollar continues to head lower. Right, the dollar popped earlier in the week, but came right into resistance at 27.92. Another thing to maybe watch for tomorrow is the energy names. Right, crude, which spent some time consolidating after that OPEC cut, did turn the corner and is moving higher now out of this range. So I'm very surprised at this. I really thought that this was not going to make it into the value area. It was right at resistance, and then that OPEC cut happened and it leapfrogged over here. If you look to see, we only have 2 more days of the week. Watch this 82 level. Let's see if crude, again, developing weekly bar, but we only have 2 more days. This 82 level is a big level for me. I'm on the weekly chart, so this value area is the value area for the year, and we might be breaking into that for the first time this year. So that is really interesting, right? So again, energy names may be back in play. So that's something that we'll be going over, and looking for possible opportunities, provided that crude can stay above 82. All right, so that's about it. Again, I think take one thing, one day at a time. The other thing that I wanted to mention, or 2 other things that I wanted to mention too. If you notice, the VIX was down today. I get this question about sometimes playing the VIX into events. I don't think it's a very good idea playing the VIX into an event, because what happens, just like earnings, and we're coming upon earnings season, which is a big thing, but it's the same thing playing an option ahead of earnings. Right, if you look at the option prices and the implied volatility is always a lot higher going into an earnings report. Why is the volatility higher? Because you have a big unknown event, right? You don't know if the company is going to deliver a strong report, weak report, and the stock could really move based on that catalyst, right? Once you take the catalyst away and the cat is out of the bag in terms of the event, what you get is volatility crush, right? Unless there's something really big that happens, right, where a company announces that they really missed earnings, right, really badly, and the market was not expecting that, the street wasn't expecting that, right? Or on the same side, if like we saw in Lulu a couple weeks ago, the name went way above the implied move, right? Then the option is worth something. But if the name comes out and has like an inline quarter, what do you see with the option price? It drops like a stone, right? Because again, it's called volatility crush. So that's why if you're looking at the VIX and you're wondering, hey, the market was down today, why didn't the VIX go up? It's because you had this big unknown event today, which was the CPI report. Once it becomes known, right, the volatility comes out. Right, so I wouldn't read into this VIX being down for the day. If you understand that principle of how volatility works into events and after events, you begin to kind of understand that. The last thing I will say is, regardless, this price action that we're seeing, right, and for now we're holding support, but it's really going to depend. We're going to get the bank earnings, which, who knows for the bank earnings? I'm not going to really share too much of an opinion, because I don't know what the banks are going to do for earnings. But then the earnings season really begins to pick up. So I think that's going to really provide the next direction for the market, is what we're going to see, in some of these earnings reports. Now, keep in mind, going into these earnings reports, you have to think about expectations. I see this on Twitter quite a lot, where people are like, oh, it's going to be a horrible earnings quarter, right? And there's many Wall Street strategists that have been predicting the same thing, right? So what does that mean in terms of expectations, right? The expectations for earnings are already very low. They were last quarter as well. So when you see a company that's going to possibly miss on earnings, right, it's going to depend on what the analysts, what they've brought down their estimates, right? Because a lot of bad news is already priced in. I'm not saying that you're not going to see bad reactions to earnings, because I think you're going to find some of those, but keep in mind where the expectations are. The expectations are not high going into this earnings quarter. So again, we'll see how it shakes out as we start to kind of get into the bigger reports after the bank earnings. And that's into next week. All right, guys, thanks for watching the video. Have a great night. See you tomorrow.